Let's go ahead and start talking about educational credits, okay? And the one thing I do want you to look for in your materials, when you go to your materials, I want you to look for Form 8863. I'm actually going to type it for you there in the chat. We've uploaded um, uploaded this form for you, Form 8863. And that is the form that we are going to use to request an educational credit. We're going to present our expenses to the IRS, and then the IRS is going to determine if we get credit or we don't get credit. So I'll walk you through this quickly, and then I'll give you an example on the whiteboard. All right, educational credit is going to be a very important part of your income tax return. But remember, not everyone qualifies for the educational credit, okay? So make sure that you understand that not everyone qualifies for the educational credit. So you're gonna have to make sure that you understand this topic very well before you get into the idea of or the process of trying to get this credit for your customer. And by the way, this presentation is also in your materials. So like if you look at materials right now, if you look in your system and you look in materials, you're going to find there something that says educational credits. It's going to be the last two. It says topic 23, educational credits. If you look at the list of credits, you're going to find Form 8863 and also this presentation for you to take with you. All right. And we're also going to upload it to that one to the one place where I was showing you earlier, where all the material is. So you have a few ways to find your material. Perfect. So let's take a look at what educational credits are. And here we go. Educational credits are credits to the taxpayer for qualified tuition and related expenses, right? And I'm not going to read this whole thing to you because the idea is for you to understand what is the point of an educational credit. And the taxpayer must claim, and I'll take you through the most important parts. The taxpayer must claim the dependent in order to qualify for the credit. But I want to make sure that you understand that two people in any given return, a few people can qualify for the credit. It could be the taxpayer. So, for instance, if you are the taxpayer, it could be you who's claiming the education credit because you're still going to school, or it could be your son, it could be your daughter. But just remember that person has to be, if you want to claim someone's educational expenses, that person needs to be part of the income tax return. Okay. So, and again, that money has to come out of your pocket. So the eligible institutions that you are going to be able to put on Form 8863 are colleges, universities, vocational schools, community college. For instance, we are the educational portion of our company is a vocational school. So if we were to give a form out, you could claim that as an expense. College, universities, vocational school, or community colleges, and then you can check. There's a website that we have provided to you where you can check whether the company is a qualified institution or not. And what I mean by qualified institution is are these institutions qualified to be offering education to anyone, right? So as you can see on point number 3, qualifying institutions and related expenses do not include insurance, medical expenses, room, board, and transportation. So whenever you're thinking about educational expenses, you are strictly thinking about tuition and tuition costs only, but you cannot add insurance, medical expenses, room and board, transportation, food, or anything like that, right? So tuition and tuition cost. Maybe you're talking about a new computer. Maybe you're talking about books. Maybe you're talking about the cost of education. But you cannot include any of the things that you've read on point number 3. So perfect. So we'll move on to the next slide. And on the next slide, you're going to learn that there are 2, and I want you to make these notes. There are 2 educational credits. 2 educational credits. That's it. There's the American Opportunity Credit. American Opportunity Credit. And you're going to see it on a lot of the questions as AOTC, American Opportunity Tax Credit. So there's the American Opportunity Tax Credit, and then there's the Lifetime Learning Credit. And then, so what we're going to learn here in the next few minutes is what are the differences between the 2. And the one thing that I'm going to ask you to do, what I'm going to ask you to do is, whenever you hear the word credit, stop thinking automatically that money is like, oh, I'm getting money. Not necessarily. Remember, some of these, whenever you hear tax credit, what that means is that you are going to receive a credit that is going to help you with your taxes. If you didn't pay enough taxes during the year, these credits are gonna help you pay those taxes. If you pay your taxes correctly throughout the year, a portion of this credit is going to be refundable to you. But what I want you to stop, thinking about automatically is credit means money in my pocket. Doesn't mean that necessarily. Doesn't mean that. So so very important. Let's go ahead and talk about the first credit, American Opportunity Credit. And let's talk about the disqualifications for the credit, right? Disqualifications. How can you not qualify for this credit, right? So I'm going to make it easier for you. Instead of saying what do you need to do to qualify, let's talk about what are the things that are going to disqualify you. If you can be claimed as a dependent on someone else's return, you cannot claim this credit. So for instance, my daughter, if she wanted to claim her educational credits herself, she can't, because she's still my dependent. I still claim her. I still pay for everything. So I have to claim that credit. And eventually she'll be able to claim it herself, but for the time being, I have to claim it because she can be claimed on my return. So this is what that means, right? If you file married filing separately, so if you file married filing separately, you cannot claim this credit. This is what I told you at the beginning of this class. Instead of filing married filing separate, just go ahead and file single, because there's not very many good situations for someone who's filing married filing separately. Someone who reports taxes with that status doesn't really have very many benefits, right? So if the adjusted gross income is above the limit, okay, it's above the limit for the filing status, and we're going to learn that today. What is the filing limit for the filing status, right? The income filing limit. So if you make too much money, pretty much, right? If you make too much money for your income, for your filing status, you're not going to be able to qualify. Now, again, if you make too much money, you're, for the filing status that you are, so if you are a head of household, and according to the IRS rules, you make too much money to claim this credit, you're not going to be able to qualify. Point number 4, taxpayer or spouse was a non-resident for any part of the year. So what does that mean? You have to have a Social Security, right? So if your kid or the taxpayer or the spouse were, so for instance, if I didn't have Social Security, we can't claim that a valid Social Security, right? If I don't have one, we can't claim the credit. If my daughter doesn't have one, we can't claim the credit. If my spouse doesn't have one, we can't claim the credit. So this is meant for those folks who have a valid Social Security. Okay, so it's under that same coverage, I would say, of the earned income credit situation where like you have to have Social Security. They're like meant for permanent residents and citizens or anyone who has a valid working Social Security. All right, so those are the disqualifications for the credit. Perfect. So, and we were talking, in those disqualifications, let me go back. Those disqualifications apply to both credits, to the American Opportunity Credit and to the Lifetime Learning Credit. Okay? So these disqualifications will apply to both. Perfect. Let's talk about the first credit, American Opportunity Credit. How do you qualify? What's the eligibility for it? Right? I want you to disregard the year. Just disregard the year here. Let's say 2017 here. Disregard the year. So in order for you to qualify, you need to be enrolled. In order for anyone or your client to qualify, you got to be enrolled in a program that leads to a degree. Is it a technical degree, a 2-year degree, an associate's degree, a bachelor's degree? Who knows? Are you getting a certificate in a recognized credentialed education, right? In order for you to qualify for this credit, you have, this is one of the points, right? So, for instance, you know, for those of you guys who are in Dallas, right? If you're in Dallas right now, so people who are going to the University of Dallas, right? People who are going to the to any university in Dallas. There's a college system in Dallas. I can't remember the name of it, but it's a Hispanic college in Dallas. We've gotten a lot of questions whether it's not college. Does that college count? And the answer is yes. I think it's something Mendes, G Mendes or something like that. But the answer is yes, because the college is accredited. And you can say the same thing for people in Georgia right now, in Atlanta, right? People going to the University of Georgia, the University of Gainesville, the University of Macon. As long as the program is leading to a degree, to a certificate, and it's recognized and credentialed, then you're okay. But you don't have to worry about that, because you are gonna the way you're gonna know whether this company or this school is enrolled or is credentialed. The school is going to provide the student with a form, and I'm going to type it for you on the chat. There's the form. The school is going to give the student a form called 1098-T. Remember that I talked to you about, that I mentioned those forms yesterday when we were talking about the earned income credit, and I said this person can continue to be your dependent, but the person has to prove that after 19, once they turn 19, they are students, and that they are enrolled in a university. And then I actually mentioned these two forms, 8863 and 1098T. So remember, whenever a student wants to, or whenever someone wants to claim educational credits, the first form that you need to ask them is 1098T, because the university, the college, the vocational school gave this person the form and said, here's your statement for the year. This is how much money we received on behalf of you. And then you, as the preparer, you're going to grab that form and you're going to put that form into the 8863 IRS form. So we'll get to that point in a second. Number two, the person must be taking at least 1/2 of a normal full-time workload for the course or of study. So basically what this is saying is they should at least be part-time students. They should be at least part-time students. And the reason why it says that is because some people go in, you know, like some people go enroll into a course, into a class, and they never finish it, right? They never go. They'll go and enroll for because they, you know, I'm gonna go study. I'm gonna go get some education, and then life gets in the way, and they never show up to class. That happens here too. Sometimes people will enroll and they never show up, right? So this is why the IRS says, hey, if you pay for it and you didn't go and you didn't take it, that's not my problem, right? You have to be at least going to school part-time in order for you to take this credit. And whenever they send you the Form 1098, because you're probably wondering and you're saying, hey, well, how am I going to know that? Because whenever they send you the Form 1098, it's going to be check marked. It's going to be marked there, and it's going to say that this student was there at least part-time. Number 3 is enrolled in a tax year as a student in the first 4 years of post-secondary study. So again, this is IRS lingo. I'm gonna clarify for you. You gotta be enrolled in the so this has got to be the first year. Whenever you're gonna take the American Opportunity Credit, you always want to take it the first year after you finish school. So I'm sorry, here, let me say that one more time. You always want to take the American Opportunity Credit after your first year of school. So for instance, this is my freshman year. I just finished my freshman year. I'm gonna go do my income taxes, or my parents are gonna go do their income taxes. This is the best time to claim the American Opportunity Credit, right after your freshman year. And then point number 4, very important, point number 4 is free of any felony convictions for possession or distribution of controlled substances. Basically, don't go to school and get high and get other people high, right? So you cannot be convicted of possession or distribution of drugs. If you are, you're not going to be eligible for this credit. Now the customer can come to you and try to go through the process, and then once they get to the IRS, once the form gets to the IRS is going to deny it because they have all the records, right? Those are criminal records, so the IRS has them. And the American Opportunity Credit, you can only claim it once every 4 years, okay? I want you to write that down, please. The American Opportunity Credit, you can claim it only once every 4 years. So let me give you this example before we move on. If you started school and let's say that you did freshman and sophomore years, right? So you did your first 2 years of school, and then you didn't finish. But you claimed the American Opportunity Credit after the first year, but you didn't finish. Life got in the way, something happened, right? And so then you want to come back, and you want to do year 3 and 4, and you do that. You do year 3, and you didn't finish year 3, and you repeat year 3 again, and for the next 6 years, you're trying to finish college, right? You already claimed the American Opportunity Credit. You cannot claim it again, even if you restart college from year number 1. You cannot claim it again. So remember, American Opportunity Credit can only be claimed once. Once you claim it, you're done. You cannot claim it again. The IRS will have the file. So whenever you're filing Form 8863 for your customer. Whenever you're filing Form 8863 for your customer, you're going to ask your customer, Mr. Customer, have you, especially if the person is on grade 2nd or 3rd year of college, right? I'm going to ask the customer, Mr. Customer, have you claimed an education credit before? And the customer is going to say yes or no. I don't remember, but you know who remembers? The IRS. So I'm going to ask the customer, Mr. Customer, have you received last year? I know that you are a sophomore now. So that last year, Mr. Customer, did you claim the credit for your son last year after the freshman college? Did you do that? I don't know. I don't remember. well, the IRS is going to remember, so let me just warn you that the number that I'm giving you right now might not be the final number, because the IRS is going to, if the IRS finds in its records that you have claimed it, they're going to reduce your refund, right? Because you already claimed this credit. So I just want to warn you. So those things you got to work. You got to make sure you tell the customer, because what's going to happen is that the customer is going to say, no, I never claimed it before, and then you do the process, you charge the customer, and then the IRS sends you an automatic response saying, hey, wait a minute, this customer already claimed the American Opportunity Credit last year, so they can't claim it, so you're going to have to remove it. So then you remove it, and the refund decreases by $1,000. And then the customer doesn't like it, and they want their money back. Remember, talk to your customers, let them know, Mr. Customer, I'd rather you find out before than send this to the IRS, and then, you know, because all they're going to do is decrease the amount. Because sometimes the customer believes that this is a prepared thing, that the amount of the refund, it's because of what the preparer is going to do. And as you have been learning over the past 4 days, it's not so much about what we do, right? It's yeah, you know, we gotta have integrity, we gotta be knowledgeable of all the laws, but it's not so much about what we do, right? It's about how the law is applied. So I want to make sure that you understand that before we move on to the next point. So, all right, so American Opportunity Credit, those are the eligibility points. Hopefully you're making notes, but remember, if you're not making notes, this presentation is in your materials today. You can just download it from there. Let's go to the next point. And here's where I really want you to pay attention, because this is where people get confused. People get super confused here. So the American Opportunity Credit, only 40% of it is refundable. But what's the total amount? What's the total amount of credit? The total amount of credit, wait a minute, let me go back. The total amount of credit is $2,500. But as I told you earlier today, I want you to stop looking at credits as money that's coming my way all the time, because it doesn't work that way. All right, so $2,500, that's the total amount of credit that someone can receive because of education credits, right? Because of the American Opportunity Credit. But only 40% of that is refundable. Okay, so what does that mean? What does that mean? It means that if I have $2,500, right? If I have $2,500 as a credit, a big portion of that is going to go towards my taxes. How much taxes have I paid? How much taxes have I not paid? Okay, so let's go through the points before we start trying to figure out how much money I'm going to get. So number one, only 40% of the credit is refundable, up to $1,000. So it doesn't matter how much I spend or I didn't spend. Only the maximum money that you can receive in your income tax refund is $1,000. Okay, so the maximum cash money that you're going to see in your refund is going to be $1,000. It doesn't matter how much money you spend or don't spend. The maximum amount you're going to see is $1,000. Okay, so and the reason I'm saying this is so that you begin to understand the process, right? So point number two, qualified tuition and related expenses include course materials, books, computers, calculators. We already went through that. Point number three, the credit is up to $2,500. You already know that. The first $2,000 is at 100%, and the next $2,000 is at 25%. Therefore, qualified for the full credit amount. The educational expense should be $4,000. So for this reason, I'm going to bring the board up so I can explain it to you, because I know it could be a little bit complicated to understand. Let's do this. Let's talk about total credit. So total credit. Hopefully you can see that. If not, I'll fix it. There you go. You can see it. Total credit. Perfect. So the total credit is $2,500. That's the total credit that I can get. And we all understand that I don't have to look at credits as money coming my way all the time, right? We all understand that. So total credit. So one of the things that you need that you'll see is that the IRS is saying it doesn't matter how much you spend. Doesn't matter how much you spend. I'm only going to see the first $4,000. So total expenses. Right? Total expenses. It doesn't matter how much money you spend in education. The IRS is only going to see your first $4,000. Okay? So you can so if you spend and let me rephrase this. Let me rephrase it a little bit so you understand it better. So if you spend less than $4,000, so please fix your notes. If you spend less than $4,000, the credit is not going to be applied correctly. When you spend more than $4,000 or more, then you're going to see more credit coming your way. So let's rewrite that note so you don't get confused, because with the way I explained it, I might have confused a couple of people. So let me explain it one more time. Your expenses, right? They have to be $4,000 or more in order for you to see credit. Your total expenses have to be $4,000 or more in order for you to see credit. Okay, I think that's a better explanation. So your total expenses have to be $4,000 or more in order for you to see credit. All right. And remember, the credit goes up to $2,500. Perfect. So what is the IRS saying? Number one, only $1,000 is refundable. Only $1,000 is refundable. What does that mean? What does that mean? That only $1,000 can hit my refund, right? So only out of this $2,500. Sorry about that. There you go. Out of this $2,500, only $1,000 it's going to hit my refund. Okay, only $1,000 is going to hit my refund. So I would say up to $1,000, not necessarily $1,000, but up to $1,000. Okay. Well, what happens with the other $1,500, right? What happens with the other $1,500? Because they told me it's $2,500. I can qualify for up to $2,500. So let's do that, up to $2,500. What happened to the other $1,500? Where are they? These are tax credits, right? Tax credit. So what these 1,500s are going to do, those 1,500s are going to go look and see if you have any difference in your tax, right? Maybe you were supposed to pay $2,000 in taxes throughout the year, but you only pay $1,000. So that money is going to go in there. That money is going to go. Money's going to go towards paying your taxes. And I want you to pay attention to this, right? No additional. No additional. What does that mean? What does no additional mean? What do we mean by that? No additional. It means that the example I just gave you, okay, you are supposed to pay $2,000 in taxes this year, but you only paid $1,000. So that means that you owe the IRS $1,000, right? You owe the IRS $1,000. Owe the IRS $1,000. So here we go. You have a tax credit. You can apply the tax credit to what you owe, right? You are applying $1,500 to it. then you might think, oh, cool. Well, I'm applying 1,500. I only owe 1,000, so that means I have $500 left, right? No, it doesn't work that way. That's what I mean by no additional. Okay, you're not gonna get the difference, right? So if you owe 1,000 and your credit is 1,500, this tax credit is 1,500. You're only gonna see the effect of the credit covering the $1,000, but you're not gonna see the difference come to you as a form of a refund, okay? Because only 1,000 of the 2,500 is refundable, okay? So very important that you understand that, okay? The other 1,500, 0% of that is refundable. So again, as I just gave you the example, you have $1,500 in tax credit, and you owe the IRS $1,000. With this $1,500 are going to come over here and get rid of this $1,000, right? So now you owe 0, but there's no additional. The additional $500, you're never going to see that. The IRS keeps that, right? So they're not, because only 1,000 of the total credit is refundable. Okay, only 1,000 is refundable. So hopefully you're following me with this example. So let me go back and talk about the expenses, because we got to see how much money I'm going to get, right? So according to the IRS, the first 2,000 is at 100%. What does that mean? What does that mean when the IRS says the first 2,000? Well, here's $4,000 worth of expenses, right? So the first 2,000 of those, it's at 100%, right? So what does that mean? And I'll show you here in a minute. So the first 2,000 and then the second 2,000. So one of the things that you got to understand, with this credit, right, is that a lot of people get in trouble with this credit for faking the credit, and you'll see this a lot. Before we go into this process, you'll see this a lot where people are saying, hey, or preparers are telling some of their clients, hey, go ahead and claim yourself as a student, and we'll put in here that you have educational expenses. But you know what? That's not very cool, right? Because the IRS is going to know that it's a fake form. You're going to get yourself in trouble. You're going to get your customer in trouble. The IRS every year is getting tougher, and it's getting smarter as how they collect information, or as how they review information, right? So don't let customers get you in trouble. Don't get yourself or your customer in trouble. So, all right, cool. So total expenses. The IRS is saying the first $2,000 of expenses at 100%. I'm going to look at those at 100%. Okay. So the next 2,000, I'm only going to look I'm only going to look at 25% of those 2,000. All right. I'm not going to look at the whole $4,000. So you can do some simple math and say 2,000 times 25%. That's $500, right? So what does that mean? That my total expenses, my credit, is going to be based on $2,500. My credit is going to be based on $2,500, not the $4,000, $2,500. Okay, because that's the rule the IRS is applying, right? They're saying, hey, the first 2,000, I'm going to see 100% of those expenses. You're going to see 100% of those expenses. I'm going to let you claim 100% of the expenses. But the next 2,000, it's going to be 25%. What about if your expenses were 12,000? So let me give you the idea here. Let me give you the idea. So so here you go. So the IRS is saying, I'm going to see the first, your total expenses right now are $12,000. 10,000 plus 2,000, $12,000, right? So the IRS says, okay, well, the first 2,000, I'm going to see that, I'm going to see it at 100%, right? I'm going to see the, those expenses at 100%, okay? So here's the first part of my expenses, my qualified expenses. Part number one is $2,000, right? Because I spent $12,000, right? So now the IRS says, okay, out of the other 10,000, I'm only going to see 25%. So you can say 10,000 times 25% equals 2,500 bucks, right? So your expenses here are 2,500 bucks for the other. So what's the total amount of expenses that the IRS is going to use for your credit? $4,500. I'm sorry if the letters are a little bit small. So the expenses, the first $2,000, and then 25% of $10,000. So the expenses on where you are going to claim credit are not on this, but the result of this. All right? Not necessarily this, but the result of this. Don't worry about it. The system is going to make the math for you, but you got to understand the basis, right? Whenever you see a bunch of numbers and you're like, wait, the customer spent $12,000. Why is it only saying 4,500? Why is it only saying 4,500? Now you know why, right? The system's going to do the math for you, right? But whenever you see those numbers, the customer's probably spending. The customer's probably thinking, hey, I'm going to get a bunch of money back because look at all the money that I spent. It doesn't work that way, right? The IRS is going to say, hey, 100% of the first 2,000. 25% out of the second batch of money, right? So this is why your total expenses for the American Opportunity Credit, your total expenses have to be $4,000 or more in order for you to see any credit kick in. Okay? So what are we doing, right? How are we calculating anything, right? So remember, these are going to be the when you go in the system, you're going to put in all the expenses as it is, right? So if the qualified expenses, if the customer expenses were $12,000, you're going to go in the system and you're going to put those expenses in there like that. The system is going to break it down and it's going to give you this number, and you're going to wonder why. Well, not anymore. You're not going to wonder why anymore because here you go. You already understand why. It's because the IRS rule says I'm going to look at the first 2,000 at 100%, and then everything after that I'm only going to look at 25%.
In the next portion of the class, we will cover lifetime learning credit, which is part of the education credits.
And a couple of things you'll understand here as we continue to go on with the class is the lifetime learning credit. That's the next credit, right? So we're gonna move on to the lifetime learning credit, a non-refundable credit. Understand that non-refundable. What does non-refundable mean? It's not going to be in my refund. Okay, it's a credit that goes against my taxes. If you didn't pay enough taxes, this credit is going to help you. Only qualified tuition and related expenses. Up to $2,000, 20% of the first 10,000. Okay, and I'm gonna show you that. I'm gonna show you how that works in a minute. Things that are not required: degree program, at least half full-time student, and free of drug conviction. So what does that mean? That let's say that you're learning, you are in a certificate process with D&J Financial, right? And you want to claim the if you bought a franchise, that's different. But if you're in a certification process only with D&J Financial and you want to claim that You can claim that, right? You don't have to be in a degree program. You don't have to be half-time student to claim the lifetime learning credit. Remember, we are in a different credit now, lifetime learning credit. Okay, so and if unfortunately or fortunately you are convicted of drug possession or distribution, it doesn't matter. You can still apply for this credit. You know why? Because it's not a refundable credit, and the credit is very little. So therefore, there's also no limit. You can use it every year. The only thing, and I'm going to explain this to you later, but the only thing you cannot do is use both credits at the same time. So let's say that on year number 1 of your college, you use the American Opportunity Credit. Perfect. Year number 2, 3, 4, 5, 6, however long you are in school, you can continue to use the lifetime credit. And remember, when I say school, I'm talking about university, college, vocational school, things of that nature, right? Not high school or anything below high school. So we're learning about the lifetime credit right now, and expenses up to $2,000 or the first 20% of the first 10,000. So actually, you know, I want you to, you know, again, this is IRS lingo, so don't pay too much attention to this. Just focus on this, up to $2,000. This is really what the IRS covers, up to $2,000. If you spend more than $2,000, it's on you, right? The IRS is not going to give you any credit on anything over $2,000. So that's the difference, right? That is the difference. And I'm going to show you here on the whiteboard. You're going to find this very interesting. Total credit, who knows, right? There's not a set amount of credit. The IRS doesn't say, hey, we're going to give you 500, 200, 800. We're going to give you. No, the IRS doesn't say that, right? There's no total credit. There's no set amount. Okay. Total expenses. This is different than the American Opportunity Credit, right? Here, you understand that the most you can claim is $2,000. If you claim more than that, the IRS doesn't count it. The most you can claim is $2,000 in expenses, okay, in education expenses. If you do more than that, it's up to you, right? You don't. So what the IRS is saying, you can report $2,000, and what you got to understand about the lifetime credit. Lifetime learning credit is that, 1, non-refundable. It's non-refundable. 2, it's based on income. So if you're already making too much money, and then we'll talk about income as well, but if you make too much money, this income is, it doesn't matter how many forms or how much expenses you have, the IRS is not going to give you the credit. Remember that it's non-refundable, meaning that if you do end up getting, and I see this a lot, people getting $800 in credit, that's sort of like the max credit, right? That's sort of like the max credit you get. Remember I told you that there's, who knows what the credit is, but this is something very, whenever you max out the $2,000, expenses and your income is low enough to get a credit, you'll get that. I see this. I've seen this $800 as the max credit, right? I've also seen these figures, right? I've seen $550 and I've seen $120 in credit. I've seen those figures, right? But so let's say that you do get one of those credits, right? It's nothing like the American Opportunity Credit. You're never going to get that money in your hands, right? Because this money is meant for you to it's meant to help you with your taxes. It's non-refundable. So if you owe the IRS money, the example I always tell you, right? If you were supposed to pay $2,000 in taxes, but you only pay $1,500, that means you owe the IRS 500, right? That's what you owe. You owe the IRS $500, okay? But if the IRS decides, based on your income, to apply this $800 to you, it's the same situation, right? Those $800 come over here, right? So you owe zero, right? This is credit. Credit. So you owe zero. Of course, if you do that math, right, 800 minus 500 equals 300, but there's no additional, remember. There's no additional. The difference they're not going to give you that because it's non-refundable. All right, let's talk about the credit. When is the credit reduced? The credit is going to be reduced, a portion of it is going to be reduced, or it's going to be reduced completely whenever you have one of these situations. If you have a Pell Grant, if your employer pay for your school, if you have a veterans educational assistance, tax-free portions, refunds or unqualified expenses such as class. Let's say that you dropped out of a class and they gave you money back because you didn't take the class. You can't claim that as an educational expense, right? So one of the things that what I'm going to show you next, right there is the Form 1098-T. Form 1098-T. But what I want you to pay attention to, what I would like you to pay attention to is line 1. Line 1 and line 5. Line 5 is very, very easy, right? Line 5 says that this person, Joan Smith, received a scholarship for $1,500. That means that that money did not come out of Joan's pocket. Do you know that? You understand that? Okay? It's very simple to understand. Line 1. This is where I want you to make a note right now. Make a note. Anytime you see $1 on line 1, you need to ask your customer. It's a customer. Did that $1 come out of your pocket? Do you have receipts for that $1? Can you prove to the IRS that that $1 came out of your pocket? You know why? Because as you can see there, it says payments received for qualified tuition. Payments received for qualified tuition. It doesn't say payments received from Joan. It doesn't say payments received from Joan's parents. It says received. It could have been received, it could have been paid by the employer, it could have been paid by somebody else, it could have been paid by a church, it could have been paid by a grant, it could have been paid by somebody else, right? So it says $9,500 there, so you don't know if those $1,500 are part of those $9,500, right? So therefore, you need to ask the customer, hey, Mr. Customer, you gotta have these receipts. Remember, I understand that a lot of customers show up to the tax preparation office like this, saying, oh, well, I don't have this, I don't have that, I don't have the other, right? What I want to tell you is, I know that we have become accustomed, and maybe not you, but a lot of people have become accustomed of thinking, they're used to thinking of a tax return as just a document that, let's go to the place that charged me less and gives me more money, right? Until IRS comes knocking on your door and says, hey, it doesn't work that way. This is the most important document. This document can help you a lot and it can hurt you a lot if you do it wrong, right? You can have a good life or have a bad life if you do this wrong. So therefore, you gotta ask the right questions, right? It's like if you show up to the Department of Motor Safety, right, to get your driver's license. You're gonna get your driver's license, or they're gonna ask you for a couple of documents, and you say, well, I don't have those documents. Well, they're gonna turn you around and they're gonna say, no driver's license for you. It's the same way, right? It's the same way with income taxes, right? If your customer doesn't have all the documents, don't start, creating situations or putting numbers hoping that no one's gonna find out, because the IRS is always gonna find out. So just want to make sure that I leave that there for you. Form 1098. Remember, in order for you to create a return with and ask for an education credit, you have to have a Form 1098. and otherwise, you're not going to have the right information or the necessary information for the credit. So let's go and finish up this process. Double benefit is the last thing. There's no double benefit. So what that means is that you cannot claim the American Opportunity Credit and the lifetime learning credit at the same time, right? You always start with American Opportunity Credit if you qualify, if you have the qualifying expenses, if you have a Social Security, and then you move to the lifetime learning credit, which you also have to have a Social Security to claim that one. But the requirements are less demanding for the lifetime learning credit because number one, zero part of that credit is refundable. Number two, the credit is much smaller, as you can see in the examples that I gave you. So
in the next part of the class, we will talk about the ITIN application. For those individuals who are not able to obtain a Social Security, there is an application to obtain a individual tax identification number.
So let's talk about ITIN. So ITIN, there you go. And if you don't know what that means, individual tax identification number. Individual tax identification number. ITIN. Individual tax identification number. I want you to understand a couple of things before we start talking about the form. Number one, the main purpose. Main purpose. The main reason, if you want to call it, main reason to report income tax. The main reason why the IRS created the ITIN is for people to report income taxes. Not for people to go buy houses, buy cars, open bank account. That's the secondary reason. The primary reason is for people to report income taxes. Okay, so that's number one. Number two, you need to understand that the number, it's a 9-digit number. So 9-digit number. Number that begins with a 1. I'm sorry, with a 9. Begins with a number 9. Okay? So you will see a 9-digit number that begins with the number 9. So something like this: 931794681 or 91. So something like this, right? But it begins with a 9. Okay? It's always going to start with a 9. Okay? Make sure you make that. Make sure you're writing this down. And I'm going to give you these two numbers right here. If the middle section of your ITIN has a 7-9 or a 7-8, if the middle section of your the middle section of your ITIN has a 7-9 or a 7-8, you were supposed to renew your ITIN last year. Okay, you were supposed to renew your ITIN last year. The IRS sent letters saying, hey, if your ITIN had a 7-9 or a 7-8 in the middle, you need to renew your ITIN. So if you know people that haven't done so, more likely those ITINs are not valid anymore, or they need to renew them as quick as possible. So last year, the IRS sent a bunch of letters saying, if your ITIN ends with a or has a 79 or a 78 in the middle, you need to renew your number. Okay. No benefits. You understand that there are no guaranteed benefits for an ITIN, because whenever you have an ITIN, whenever a customer has an ITIN, the IRS treats that person as non-resident. So I don't want to get too technical here. I don't want to get too technical with this process, but I want you to understand the IRS has no power to give someone, to grant someone legal status, right? So that's the Department of Homeland Security or what do you call this? INS, right? Immigration. So the IRS has no power, so therefore they cannot give someone a number so they can go and work. So this number is not for you to work. This number is for you to do transactions, business transactions, right? So the number not valid to work. So whenever you see someone working as a contractor or someone working with their ITIN number, the IRS sees that transaction, the IRS sees that process as a transaction, not as an employee. So, so let's say there's someone working in construction today, and they're working by the hour. They have their ITIN number, they don't have a social, right? The IRS doesn't see it as an employee transaction. They're not employees. They are non-resident individuals who are making a transaction, right? And it's up to the Department of Labor to figure out if this person if this person continues to work or does not continue to work, right? So I don't want to get too technical, but just understand that anyone who's working a job with an ITIN, the IRS is going to treat them as a non-resident, and the IRS is also going to treat them sort of like a business, because they cannot, under constitutional law, they're not able to treat that person as a resident of the United States or a citizen or someone under a temporary work permit. Therefore, the ITIN is not valid to work, right? It doesn't grant you any benefits, okay? So those are the main things that you need to understand about the ITIN, other than how you fill out the form and things of that nature. And that's going to be something fairly easy. All right, so make sure you understand this. I'm going to erase this and go to the next point. The next point is how do you get an ITIN? But before I do that, I want to tell you this. Two kinds. There's two kinds of ITIN. There's two kinds of ITIN, okay? There is, number one, the taxpayer ITIN. And number two, there is the dependent ITIN. Okay? So the taxpayer ITIN is open for anyone. So let's write in here, anyone. Okay, anyone can get an ITIN for a taxpayer. Okay, I'm actually going to just do it down here, dependent. The taxpayer is open to anyone. Okay, What are the requirements? What are the requirements? Number one, present income tax return. Number two, so present income tax return. You have to present income tax return, and I'm going to explain this better in a second. Form W7. Original documents. That's number 3. Okay? So there you go. So let's say that I've been here in the United States for a couple of months and I don't have Social Security, and I want to get my ITIN. So taxpayer ITIN. So I go with Olga, and Olga's gonna do the whole process, and she's gonna explain me that under new regulation, under IRS regulation, in order for me to obtain an ITIN, I have to also do my taxes for the first time. I have to do my taxes. How am I going to do my taxes if I don't have a number? Well, we're going to provide you, if you're a franchise of D&J, we're going to provide you a temporary number, temporary ITIN number. Most people who send the form, they just leave the Social Security blank, or they use a fake Social Security and then they scratch it and say applying for ITIN, right? But we're going to provide you a temporary ITIN, so when the form gets to the IRS, there's no confusion, and then your customers' documents don't get misplaced. So I am here right now, and I want to. Olga's going to process my ITIN, but she's going to explain me a couple of things. Number one, as a customer, you need to start, since you want a taxpayer ITIN, you need to start with presenting your first tax return. So we're going to create a tax return right now, and we're going to do that. Create a tax return, and then we're also going to file Form W7. And this Form W7 is how you are going to ask for an ITIN, through the Form W7. And then, as a customer, you're going to have to send the IRS your original documents, original passport, either, and I'm going to show you this in a second, the original passport or 2 other documents. If you don't have a passport, you're going to have to send the matricula and your acta de nacimiento, your birth certificate from Mexico, from whatever you're from, right? Either you send the passport, the original document, the actual document, or you're going to have to send a combination of 2 documents. So there you go. Whenever Olga is ready to send this package to the IRS, 3 things are going to go in that package. These 3 things are going in that package. Whenever the IRS receives that package from Olga or the customer, the IRS is going to see Form 1040, right? The tax return, the first tax return, the W7 form, and the original documents. They're going to be in the package. The IRS is going to do an investigation. The IRS is going to process all the information, and then the IRS is going to send everything back to the customer. And then the IRS is going to send the ITIN letter saying you have been approved or you have not been approved. Okay? So that's the first kind of ITIN. It's the first kind of ITIN. The ITIN where anyone can get that. Anyone can get it as long as you meet these requirements. Anybody can get an ITIN, this ITIN, as long as you meet these requirements. You have to present a tax return because you're telling the IRS, I want an ITIN, a taxpayer's ITIN, so the IRS says, perfect. Come on, you gotta present your taxes first. So these 3 things are going to happen at the same time. When the customer is sitting with you, these 3 things are going to happen at the same time. Number 2, the dependent ITIN, and this is only for Mexico and Canada. If your customer is from, let's say that your customer, for instance, right, I want to claim my grandmother in Mexico, then I can do that. But let's say that I want to claim my grandmother in Colombia. I cannot do that because Colombia is not part of this benefit. All right. My dependents have to be of Mexican nationality or Canadian nationality in order for me to be able to ask for dependent ITIN. And what do I need for them? I need a Form W7 and I need original documents. Okay, and the person who's requesting the ITIN, needs to have either an ITIN or a social. Okay, so the requirements are this for the dependent. If I want to claim my grandmother who lives in Mexico, I am going to ask my grandmother for her original documents for a passport. We're going to fill out a Form W7, so I have those two. But then I need to have either the ITIN or social. Because I'm requesting, I want to receive an ITIN for a dependent, right? So it's the same reason, like if you were trying to get an ITIN, if you were trying to get an ITIN number for any of your dependents, then in Mexico, then these are the requirements, right? Number one, Form W7. Number two, original documents, and then number three, the Social Security card. Either ITIN or Social Security card. You got to have one of those because you are requesting the ITIN, right? So very important. So these are the two kinds of ITINs and the requirements for those ITINs. Let me just give you one more thing, and then we can close the class. And I know that part of the materials that we're going to be uploading tonight is how do you fill out the form. That is and you believe me when I say this, that is the easiest part. Okay, that's the easiest part. You can fill out the form. It takes less than 2 minutes to fill it out. We're going to show you how to fill it out by hand, and also how to show you how to fill it out in the system. So here you go. ITIN. It's for people who cannot have a social. Okay? And make sure you understand that, right? ITIN is for folks who cannot have a social security, right? So, summary, right? Two kinds of ITIN. There's two kinds of ITIN. IRS requires original documents okay? IRS requires original documents, and then must present tax return for first time applicant. Okay, so there are 4 important points, right? 4 important points that you got to keep in mind. If you are ITINs for people who cannot have Social Securities, there are 2 kinds of ITINs. The IRS requires original documents, and you must present a tax return the first time you're applying for an ITIN for taxpayer. And then clarification, If you're asking for ITINs for your dependents in Mexico, you don't need a tax return if you already have an ITIN or a social. But if you're applying, you're going to find those situations sometimes where the customer is applying not only for himself or herself, but he's also applying for a lot of the dependents in Mexico. So anytime you're going to obtain a taxpayer ITIN, you need to present a tax return.
In the next part of the class, we will focus on Form W-7 for both the dependent and the taxpayer. So in this part of the class, we're going to talk about the Form W-7, the actual form. It's a very simple form, and you can create this form in less than 5 minutes. As you can see, it's very self-explanatory. If you are applying for a new ITIN, and we are going to focus on the application for a taxpayer. And on a later part of the class, we're going to focus on the application for a dependent or a spouse. So let's say that we are applying for a new ITIN. Really, if you're renewing the ITIN, the process is very similar. All you have, the big difference is that you will click on the renew ITIN instead of apply for new. You go renew ITIN, and then you do the rest of the steps that I'm going to do here in a minute. All right, so apply for a new ITIN. This is for a taxpayer, and I'm going to say that I am the taxpayer. So Josh Alballero, and then my home address here in the United States. Remember that the IRS doesn't treat me as a resident of this country, so it's going to require for me to add a foreign address. So very important. Let's say Houston, Texas 7503 or 77035. And then the foreign address, right? Since I am, and I want you to understand this, since you legally are not in the United States, or you are not legally in the United States, the IRS does not consider you as a resident. So it's going to require as a foreign address. So in reality, the IRS is treating you as if you are just working here, but you don't live here, right? Because if you don't have a Social Security, if you don't have legal status in the United States, legally the IRS is not supposed to give you any sort of a documentation for you to conduct any business, unless you are, unless you can provide a foreign address, right? So here we go. So 4,500. I'm going to just write here, add foreign address. So foreign address, very important. Make sure that you write it down just the way it is on your passport. Let's move to the birth information. So I'm going to add my birthday there. Country of birth. City and state. Male. Country of citizenship. Foreign tax ID. I want you to pay attention to this part right here where it says, if any. You don't have to really worry about it because that's not something that is really required. The next step is the next step is 6D. What documentations am I sending to the Internal Revenue Service to provide my identity or to show my identity? I'm going to say passport, and down here I'm going to say that the Mexican government gave me that passport and the passport number, the expiration date. Remember that it cannot be expired, and then date of entry into the United States. This is very important that you write the correct date as close as you can. Don't remember that this is a federal form, so if you are or your client, your customer is in the process of taking legal status, then if you lie on the application or you put a completely different date, this could become an issue for you in the future. So let's just add a date here for the example. And here we go. Have you previously received an ITIN? I'm going to say no. If you're renewing your ITIN, you need to say yes and write down the ITIN number down here. All right, so you are done. Remember, all you have to do is sign your W-7 at the date and the phone number. You don't have to worry about the name of delegate and any other stuff down here. This is for acceptance agents only, so you do not have to worry about that. And then the last thing that I want to remind you is that this form is part of a package that you need to send to the IRS. If your customer has never done an income tax return, then the first thing they need to do is process the income tax return with you, and then you file the Form W-7, and then you obtain the customer's passport or documentation of choice, and you create a package. Inside of that package, you're going to have Form 1040, W-7, and the ID or the identification that the customer will be using. Remember that the IRS has made it a requirement now. If you want an ITIN, you need to first send me an income tax return, or you need to send me the income tax return along with your W-7. I am not going to give you an ITIN unless you send me the income tax return. Okay, so let's talk about applying for a dependent or a spouse. So you're going to find some similarities to the process, but ultimately you'll see that they are a little different. So I'm going to walk you through this situation here in a second. So let's just say that we are applying for a dependent. My dependent has to be a Mexican dependent or a Canadian dependent. I cannot claim a dependent that lives in any other country, or so the dependent needs to be either here in the United States, not able to obtain a Social Security, or it's a resident or a citizen of Canada or Mexico, right? So let's go through the process. We're going to apply for a new ITIN, same way as we did before. And we're going to choose I'm either applying for my dependent, or I'm applying for my spouse, right? Either one of those two. So my dependent or my spouse. So I'm going to say dependent, and the next thing that the IRS is going to ask me to do is to put my information down here. They're going to say, give me your Social Security or your ITIN, so that we know who is requesting the ITIN for this dependent. So I'm going to say, here's my ITIN. I obtained my ITIN a few years back, so here is my ITIN or my Social Security. And the IRS is going to ask me to write down my name there. So my name must match this ITIN or this Social Security, right? You'll do the same thing if you're asking for a spouse. Okay, so don't forget that part. Anytime you're asking for an ITIN, or anytime you're asking for an ITIN for a dependent or a spouse, you need to provide your current ITIN or Social Security. If you don't have one, then you need to be applying at the same time as everybody else is. So let's say that you're requesting a dependent ITIN, but you don't have an ITIN yourself or a Social Security, then you will have to send a Form W-7 plus your tax return, and you follow the process that we talked before as far as how to obtain an ITIN for a taxpayer. And then here you will say applying for ITIN, and then make sure that your form is included in the package that you're going to send. But let's say that this customer already has a Social Security or an ITIN. Okay, Josh Albayero, I am requesting a dependent ITIN, and I'm going to write down the
I'm going to write down my wife's or my dependent's um, information here. So this dependent doesn't live here, but I want to receive the. This is where I want to receive um, the ITIN whenever the IRS approves it, because that's my house here. But the dependent lives in this address, in the foreign address, right? That's where, because it's a Mexican dependent, and then of course the date of birth of the dependent. So I'm gonna add another date of birth there. Right, this is a dependent that's almost, it's a little bit over 2 years old. Mexico, lives in Puebla, Mexico. Country of citizenship, Mexico. Uh, doesn't have a passport. This person doesn't have a passport and hasn't entered the United States yet. So what I'm going to do is I'm going to say other, and I'm going to say school records, right? So as much as I can, I'm going to abbreviate this: school records. And of course there's not going to be any numbers. And in the previous part of the class, you learned what are those pieces of documentations that you can send to the IRS. In the case of this is a kid, you can send hospital information, pictures, school stuff, so things of that nature. So we're basically done here. None of this applies. No, I don't have another ITIN, or I've never had one before. And then here you need to sign. You are the applicant. You sign, you date, your phone number, name of the delegate. And here's an important part, right? If you are the uncle or the aunt, you are going to have parental permission. You got to be either the parent or have parental permission to be able to ask for a cousin or a nephew or something of that nature, right? So very simple way to ask to fill out this form. As I said before, it takes less than 5 minutes to do. Remember that this form is to be part of a package. Inside of that package, you're going to have to send this to the IRS with the documentation for this dependent. So when you send it to the IRS, you can send the form by itself, with the documentation. You do not need to send a Form 1040. If you already have a Social Security or an ITIN, you don't need to send a Form 1040. You just send the application via mail and wait for the response from the IRS. Remember that this forms W7 cannot be e-filed. So if your customer wants to apply for an ITIN, it's better if they do it before tax season. So that way, when tax season is here, then they already have the ITIN. But otherwise, if the customer wants to apply for a new ITIN during tax season, they're going to have to send the entire tax return and applications together to the IRS.